Hello everyone, welcome back to Crack Grade B. So we are continuing the series on costing questions, right? Some of you were asking in the live class that when the finance class will start. So finance class will resume once we are done with costing questions, and whenever your finance class will take place, you will get to know about it, right? Because sessions will be created. Now let's move forward and discuss our costing questions. So we have completed till question number 16 yesterday. Now we are moving ahead with question number 17, right? So let's see. Question is, material becomes key factor if quota restrictions exist, insufficient advertisement prevails, there is low demand, and there is no problem with the supplies of material. Now, yesterday also I have told you that what is a key factor, correct? Yesterday there was some question under which we were discussing that which kind of budget should be prepared first, and I told you that budget with a key factor. That means any component of your total process. Suppose in order to make a biscuit, what all you need? You need the maida and other raw material, correct? Apart from it, you need labor, you need machinery. These are the three components that you need. Now, even if one of them is not working properly or you are not getting supply of even one of them, then your process will get hampered and you will not be able to produce the entire quantity of biscuits which you have assumed to produce. Correct? Therefore, in this case, what happens is key factor means it depicts scarcity. You are having less of this particular resource and hence you have to use it very efficiently. You have to prepare budgets accordingly so that you can talk about it, right? Now see, so what all is given to me over here? Insufficient advertisement prevails. There is no absolute connection with the advertisement. But yes, you might get confused over here if you do not know the meaning of key factor, correct? So this is not the case. Low demand is not the case. We are dealing with deficiency in supply. I'm not getting proper supply. Demand is there. I need maida in order to make biscuits, but I'm not getting maida because there is shortage in the market. So this is also not the scene, and there is no problem. There is problem with supplies of material. Therefore, we are treating this particular factor as key factor. So the correct thing is quota restrictions exist. Quota restriction means suppose you have to manufacture a medicine and the component which you need for that medicine is distributed by the government. Government distributes that particular raw material which you need, but there is restriction on how much raw material one can get because government has put up a restriction. So this means what? This means if quota restrictions are there, then my supply is limited. I am getting less of a material, hence material has become my key factor. So this is how conceptual questions will be asked. Next question. Which of the following is not a potential benefit of using a budget? Let's see. Not a benefit. You have been asked. So number one, enhanced coordination of firm activities, more motivated manager, improved interdepartmental communications, and more accurate external financial statements. See, budgets are prepared internally. Budgets work as standard to guide you into your operations. And always remember, there is a difference between the budget versus actuals. Because they are prepared beforehand and this is what your actual performance is, right? So this is your actuals. So in this scenario, yes, Coordination will increase because I will prepare budgets accordingly. Each department has to coordinate one another. There will be improved communication between departments because in order to set a budget, so whenever a budget is set, it is an organization wide exercise, correct? Finance department has to contact marketing people, has to contact purchase people, have to take estimates from them that what is the estimate marketing team has given. Like marketing team has said ki, okay, in this coming year we are going to sell 1 lakh units of our product. This is the budget which marketing people have set. Now everything which will revolve around this. What are the raw material that we need for it? Purchase department will be contacted. Now how will we conduct the production of this? What are the labor we require, correct? And what are the machinery space that we need? Do we need to do any upgrade in the machinery? So here comes your capex department, right? Capex is capital expenditure and all those departments. So it is an organization wide exercise. If you want to set a budget, then you have to take everyone in the loop. That is inevitable, correct? You cannot avoid it. So clearly interdepartmental communication will improve. Managers will be motivated. Why they will be motivated? So see, this must happen with you as well, that whenever you set a target for yourself, you feel motivated to achieve it. Without a target, your life looks aimless, right? Like what I have to do now, if I have decided it beforehand, then it obviously helps me, right? So that is the way. So the not benefit, which is not a benefit of preparing budget, is this: I do not know whether my external financial statements are not a budget related thing. These are actuals, correct? The actual thing which you have done, and obviously it can involve a some bit of window dressing. It can, like it may so happen that you want to say your budget and actuals are quite similar. So in order to prove your point, what you can do is you can involve some kind of window dressing, some kind of tempering with the financial statements, right? So that is the case. So this is not what you can say surety that if you prepare budget, your financial statements would be accurate. So option here is option D. Next, this is a very basic question of standard costing, that material cost variance is equal to. Options are given to you: material usage variance, material mix variance, material price variance, material usage variance, price variance, yield variance, mix variance, and yield variance. Now, what do you think? What would be the answer for this? So if you know, like if you can use just a little bit of common sense also, let's suppose, वैसे तो I am assuming कि you must be knowing the answer for this, but even in case you don't know the answer for this, then also you can apply a bit of your brain and you can solve this question. This is so super easy. You have been asked cost variance. Now this is for sure that this particular thing is summation of two things, right? So here see, price and usage. This means what? This is price, this is quantity. Price multiplied by quantity, and those things only which give me my cost. So I am thinking that this is the particular option which is correct, and hence it is material price variance plus material usage variance. Summation of these two will give you your material cost variance, right? So the correct answer is 19th B. Next, so all of these questions are I have tried to include, which are a bit confusing, bit conceptual, not very much leaning toward numericals, because we have done an ample of that, so I do not want it to go there. But what I wanted to was that you should be able to attempt such kind of questions on your own, because this is only thing which will improve your confidence. Correct? You might see these questions in your exam, you might not see, but the thing which you will get from solving these questions is confidence. That is the most important to appear in the exam, what I think is. So see over here, question number 20th. The technique of differential costing is adopted when ascertain PV ratio, ascertain marginal cost, ascertain cost per unit to make a choice between two or more alternative courses of action. What should be the answer for this? Differential costing means what? Differential costing is suppose here is a machine A, here is a machine B. You have to choose that which particular machine you should buy. You want to choose, this is an example that out of these two machines you have got these two options and you want to choose that which machine you should buy. So what you will do is, you will see per unit costing of this, you will see per unit costing of this, and then you will compare these two, you will find the difference among these two. Correct? So differential costing is adopted in order to find out choices between two or more alternative courses of action. You want to find out that what is the differential profit or differential loss which I am making if I am choosing this particular machinery or that particular machinery, right? So this is how they can trick you, like PV ratio, because remember we have done a formula of PV ratio, difference in profit divided by difference in sales. So they are using that thing over here in order to confuse you. So always remember, when given a choice, always go for the broadest possible option. And here PV ratio, marginal cost, cost per unit, these are all part of finding out per unit costing. Correct? These are all the steps. For in order to find my per unit cost, I should know PV ratio. I should ascertain my marginal cost. Marginal cost means what? Variable costing. So I should be able to know that what is my variable cost, what is my PV ratio. Then only I will be able to arrive at cost per unit. But the ultimate purpose of everything over here is to choose between two or more alternative courses of action. So this is the broadest possible choice and hence I have chosen this. Even in exam, if you have to take a guess, then do not make a wild guess. Do make a calculated guess based on all of your understanding which you have gained till date. Next, cost of service under operating costing is ascertained by preparing cost sheet, process account, job cost sheet, production account. Now, what should be the correct answer over here? See, this is again a super easy thing. If you have done for operating costing, what you do exactly is you list all the expenses. Suppose you are into the business of hotel or you are into business of chain of restaurants or a truck, whatever kind of operations you are into it, you write all the expenses and then you find out what is the total cost. So process account is not applicable over here because that is done in process costing. Job cost sheet, job costing. Production account. Production account is not particularly related to your operating costing, right? Whenever you are doing production of something, producing something, that comes into your production account, that goes in there. But you see, in operating costing is relevant for all the kind of businesses which are involved in service sector. correct? So obviously they are not going to produce something very substantial. They are providing services, and hence there is a cost for those services. So obviously production account is not my thing. So cost sheet is the correct answer. Cost sheet is what? Cost sheet is listing of all the expenses which we have incurred and then summing them up. That's what we do in operating costing, correct? Moving on to the next question. Now this question has appeared from contract costing. They are asking you, cost plus contract is usually entered into those cases where cost can be easily estimated, cost of certified and uncertified work can be estimated, cost of certified, uncertified and amount of profit transfer to P&L account is estimated, and none of the above. What should be the answer of yours? So first of all, first thing first, what is cost plus? So cost plus contract means the contract price which you will charge is cost plus the gain. Whatever profit you want to charge, so you will determine cost and then you will add up to it a fixed percentage. Let's say 10%, 20%, 30%, anything. So whenever you are doing a contract with somebody, you will say we'll have a cost plus contract. So cost plus contract means whatever the cost will come out, whatever. It may be 40 lakhs, it may be 50 lakhs, anything. We will add a 10% gain on it, means 10% profit on it. So this is known as cost plus contract, and for that I should know my total cost, and this is my total cost. Now this option is also what you can say valid one. If your cost can easily be estimated, yes, this is a factor. Yes, this is a factor, but this is not a conclusive factor. The conclusive thing is cost of certified work and cost of uncertified work can be estimated. Can you know the total cost? Yes. So what is my total cost? Certified work cost and uncertified work cost. So if I know this, then obviously I'll be able to add a fixed percentage of 10% or 20%. This is not relevant. What is the amount of profit transfer to P&L account? Means the profit or the percentage of contract price which you receive from the person who has given to you contract. If you receive some amount of it, then you transfer it to your P&L. So that amount is not relevant for me in determining cost plus contract, because that is what? This is what we are transferring over here is whatever contract price we have decided, this is the contract price, correct? Whatever is decided, a fraction of this, let's say 20% is given to me, and I am transferring this 20% and some part of it obviously to my P&L as my income. So this will come very later on. I want to know that how I will determine contract price. This is the later step which will be taken later on. First you have to decide contract price, and for that I should know that what is my cost of certified work and cost of uncertified work. So I hope this is clear to you. Question number 23. Most of the expenses are direct in, means in these four options or these four, obviously three are there, like fourth is none of the above. So in these three, in which type of costing most of the expenses are direct expenses? This is being asked to you. So what should be your answer? Correct? So I'll tell you. Job costing. Job costing mein we have seen that there are different jobs, correct? And let's suppose there are departments, stores department, engineering department, correct, human resource department, they will transfer their resources to these jobs, correct. That's how they'll transfer their resources. So some amount will be direct expenses, and the all the costs which are incurred in these departments will be allocated to these jobs, right? So some expenses will be incurred specifically to the jobs, and then whatever the expenses are there for these departments, this will be allocated on these jobs. That means in job costing, you are going to have a fair share of indirect expenses. Settled. Next is your batch costing. Again, in batch costing, what is happening is you are producing same kind of product but in different batches, like your cold drink, right? So whenever you purchase cold drink, we see that what is the expiry of this particular cold drink, correct? There itself batch is also written over here. So see, in this case, this is a normal process but divided into different things. There will be direct expenses and there will be indirect expenses too, which will happen because you are using factory premises, you are using the whole administrative setup, selling and distribution overheads are there, everything is there, correct? So direct plus indirect fair share will going to be happen because this is how a normal factory works, correct? There will be selling expenses like salesperson and all those will be involved, right? Salary of accountant, rent of building and all those things will be here. But in contract costing, see, contract costing are done for large contracts. Large contracts means like you have to build a tunnel or you have to build a particular segment of road, you have to build a bridge, correct? So in this scenario what happens is material direct, yes, and you won't believe but fixed assets which are used for such type of contracts because it takes such a long period of time in order to build these contracts. So fixed assets are also kind of allocated to these contracts only. One contract will have one type of fixed assets only, correct? So hence this is going to have maximum share of direct expenses. Why? Because the size of contract is so big that every resources need to be directly involved with this particular type of contract. So out of particular these three, most of the expenses, larger variety of expenses are direct in contract costing. And how can I say that? Because in the other two, the work which you are doing is small in nature, correct? So when your work done is small in nature, supporting cost is very much because you have to produce large quantity of that work in order to produce revenue. Just like your cold drinks, right? So you have to produce so many batches of cold drinks in order to generate revenue. Your output is small, but in contract costing your output is so large. You have to dedicate resources directly for that contract only in order to complete it, correct? Therefore I can say that most of the expenses will be direct in contract costing because if I'll be able to complete one contract, then this will be able to give me a huge share of revenue, correct? Next question. Just wait for a second. Yeah. So, which of the following items is not excluded while preparing a cost sheet? You have been asked. Always see what is the direction given to you. Although the time is less, but never do the mistakes in hurry. Always see the directive given to you. So here they are saying which item is not excluded while preparing a cost sheet. That means it is included. So goodwill written off, provision for taxation, property tax on factory building, transfer to reserve, and interest paid. So this is a very knowledgeable question for you, because they have included so many aspects over here which you can remember, right? So see, goodwill written off, not an actual expenditure incurred, so hence not to be included. Interest paid, I have already taken in some of the class that this is a financing nature expense, not directly related to your production, hence this goes into your costing P&L but not in cost sheet. Settled. Provision for taxation, you are making a provision, not an actual expenditure incurred, hence it is not included. Next, transfer to reserves, you are transferring profit from P&L to reserves, means you are saving the amount. This is not an expenditure, and in cost sheet what I want is list of cost added by profit, so that I know that what is the estimated selling price or sales which I have to do. Transfer to reserves has no role to play in case of cost sheet. So the only thing which I will include and not exclude, I will not remove for cost sheet, that means I will include it into cost sheet, is property tax on factory building. Why I will include that? Because this is an actual expenditure. So you can easily identify the odd one out over here. All these are like not direct expenses, and I have told you that interest paid goes into costing P&L. So the correct option is option C. Next, when the amount of under or over absorption is significant, it should be disposed of by. What is this under or over absorption? This means, see, you have incurred factory overheads. Actually, you have incurred 50,000. 50,000 rupees you have incurred. But your practice is such that what you do is overheads divided by direct labor hours, and this is how you allocate overheads to different products based on direct labor hours. If A product has consumed 10,000 direct labor hours, then that much overheads will be allocated. B has taken 5,000 labor hours, then that much overheads will be allocated. So this is known as absorption, means this total amount is divided among these three products on the basis of direct labor hours. Correct. Now this can be the scenario that some amount of direct labor hours has lost due to inefficiency. Correct. That is not allocatable to any of the product. So what will happen in this scenario? Let's suppose you are just able to allocate 40,000 in these three products. Correct. You are just able to allocate 40,000. Now where does this remaining 10,000 should go? Where will this remaining 10,000 should go? You have to provide me an answer. Whether you should transfer to costing P&L, use of supplementary rate and allocate to the products, carrying over as a deferred charge to the next accounting year, or none of the above. Which should be the correct option over here? Tell me. Another thing which you should remember, that they are saying it is significant. Tell me the answer for this. So the correct answer which we will have over here is use of supplementary rates. if it would have been just a small amount, let's say 200, 300, 400, means the difference is not that much significant. So I would have taken it to costing P&L. Correct? If the difference would not have been significant among the actual overhead and the overheads allocated, then I would have taken to costing P&L. But because it is significant, then I will use a supplementary rate. Supplementary rate means then I would like to allocate the difference, that is 10,000, on these products on the basis of some other factor like machine hours, right? Whatever may be the cause of this under allocation, I will find out and I will use that as a supplementary rate in order to distribute this over these products. But why I will use this supplementary rate? Because they have said that difference is significant. If the word significant would not have been here, then I would have transferred the nominal amount to costing P&L. Suppose actual overhead incurred was 50,000 and what allocation I have done is 49,300. That means 700 has remained unabsorbed. So what I would have done is, this is such insignificant amount, I would have transferred it to costing P&L. Correct? So now you see, just a word can make whole lot of difference. So be attentive, just value all your options correctly and then decide. Next, which method of absorption of factory overheads do you suggest in a concern which produces only one uniform type of product? So they produce just one product and which is unified. Suppose a factory of Parle-G biscuit, they just produce Parle-G, 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 and that 5 rupee wala packet they produce. So this is what uniform product, one type of product, no other product is there. So at what basis they should allocate their factory overheads to the product? Options are percentage of direct wage basis, direct labor rate, machine hour rate, a rate per units of output. Now, what are your options are here? See, so this is how the question can trick you, correct? They have asked you, you are producing a uniform type of product. It means there will be no variation in the labor, no variation in the machine hour. Correct? So here the most appropriate basis would be a rate per unit of output, because you are using similar just one type of product. Now suppose you are producing two products. Both the products are using machinery. So in that scenario, if you are using machinery for a longer period of time, then it would be appropriate for you to use machine hour rate. Correct? Next, if you are producing two products and you are having labor time more on both these products, means in order to produce these products you need more labor in comparison to machinery. So in that scenario, the better thing would be direct labor rate. Correct? So this is how your options will change. And percentage of direct wages basis, so with this we have discussed, then this is used in the scenario where, let's suppose your direct labor, there are different types of labors and their rates, labor rates also varies too much. So in this scenario, that will be appropriate that if you use direct wage percentage basis. Correct? So this is how this will work. You have to see the options. Next, batch costing is suitable for sugar, chemical, pharma, and lastly oil industry. Now see, I have told you that batch costing gets necessary because of your statutory regulations as well. You need to have a different batch sizes because the quality testing and all those things happen, and if any of your batch, like if it gets rejected in the quality check, then you have to reject the whole lot. And these are applied in the very crucial scenarios. So see, sugar is crucial, No, how can we differentiate between sugars and all those things? So nothing over here. Batch costing is prevalent in pharma industry. You will be very easily be able to know, because if you see the medicines, whenever we purchase medicines, then behind the strip batch code is written. Correct. That's how inventory is also maintained in pharma industry. So batch size is suitable for pharma industry, not for chemical and all these type of industries. Easy question. Next, selling and distribution overheads are absorbed on the basis of rate per unit, percentage on works cost, percentage of selling price of each unit, and any of the above. What should be the correct answer over here? So, with regard to selling and distribution overheads, let me tell you, there is no such restriction which lies, correct? You can use anything out of it. You can do percentage on works cost, yes. Selling price based percentage means in this scenario it happens like this. Selling and distribution overheads are 10% of selling price. So this is known as percentage on the selling price of each unit. This scenario can also be adopted and rate per unit, like 5 rupee per unit is the selling and distribution cost. So everything is acceptable in selling and distribution. This is up to you. This is up to business enterprise at what kind of overhead absorption they want to follow. But when it comes to factory overheads, there you have to see that there are different variations. If you are using more labor, then use direct labor hour. If you are using more machinery, then use machinery hour. Correct? And other options we have already seen above. So this is the thing. This is a very super easy example from your operating costing. So a hotel is having 100 rooms, fine, which are 80% normally occupied in summer and 25% in winter. Period of summer and winter are taken as 6 months each, and normal days in a month be assumed to be 30. So the total occupied room days will be. Will you please calculate this for me? So I'll give it as homework, and I want to see that how many of you can give me the right answer for this. Correct? So I'll do one more thing for you. I'm removing this. So this is a little help from my side. This is super easy question. Correct? Super easy. Even if you do not know the concepts of operating costing, you can easily solve this. Okay, fine. I'll give you one more. I'll give you 50-50. A and D has been removed. Now you have got two options, and please do tell me by commenting down below this video that which of the option is correct for question number 29. I am repeating it again. Even if you do not know the concepts of operating costing, this is just a common sense based question, and just you have to multiply and add some things. Next, there's nothing to be explained over here, hence I'm not explaining it. I hope that this is self-explanatory and I'll get answer from many of you. So please do not forget to give me the answer for this. Next, continuous stock taking is a part of ABC, annual, perpetual, none of these. Which one is the correct option? I hope you guys have easily guessed it. This is just too much easy because there are no other difficult options over there. Just a straight away correct option is given to you. Continuous stock taking. So see, annual stock taking is removed. Why? Because the word annual itself says that once in a year. Once in a year you are doing the stock taking. Fine. ABC analysis divides the stock into three categories and it tells you to focus on the most important inventory items. Correct? But It does not talk about continuous stock taking. The correct option over here is perpetual inventory. ABC analysis, they have said that please divide your inventory on the basis of importance, and then please have a control on it, just have a look on it, maintain safety stock and all those things. But continuous stock taking is a part of your perpetual inventory. You are always taking the stocks, you always measuring it, because this is a kind of inventory maintaining system. Next, in which of the following incentive plans of payment wages on the time basis are not guaranteed? Again, a super easy and given question. See, time basis are not guaranteed, clearly given on the face. So this comes under your heading of labor, right? So whenever we talk about labor, we have to study all of this. So Halsey, Rowan, Gantt task and bonus system, even if you are not aware about this, don't worry. Correct option is given in front of you. Taylor's system gives the wages on the basis of each piece you produce. Means if you are producing 100 pieces in a day, you will get paid accordingly. If you are producing 200 pieces in a day, you will paid accordingly. But in all these systems, there is time wages which happens. Time wages means if you are working for 8 hours, then you will get paid for 8 hours only. They do not have any concern about how many units you are producing. You might be producing 50 units in a day or 100 units in another day. That is not their concern. They give you wages as per time. Yes, there is an element of bonus if you are able to produce, if you are able to conduct your task before the standard hours. Standard hours are fixed, then your actual hours are compared. If you are efficient enough, if you have overperformed, then there is an element of bonus here. But if you have not performed efficiently, then time wages are guaranteed. But in Taylor's differential piece rate system, time wages are not guaranteed and you are paid on per piece basis. Every piece you will produce, you will get paid for that. Next, in product mix decision, this comes from your marginal costing. So which is the most important factor to consider in order to try to maximize profit? Fine. Product mix decision means you want to find out that which product is most profitable for us and what quantity of this product we should produce in order to have the gain. Right? So contribution per unit of scarce resources used to make the product, contribution per unit of product, variable cost per unit of product, product unit selling price. Now these three are useless, so I am not going to even discuss on it. This is important. This is the correct option for you over here. So what happens is, if there are three products, each of the three are profitable. This is giving me 10 rupee contribution, this is giving me 20 rupees contribution, and this is giving me 30 rupees contribution. All of them are profitable, right? So if I would be having capacity, means I have got material, I have got labor, I have got machine hours. So I will produce all these three. There is no problem, correct? But it always happens, let's suppose I am in short of raw material. I do not have raw material. So I will see that, okay, this product uses 1 kg of raw material. This uses 4 kg of raw material and this uses 5 kg of raw material. Now I will compare the contribution that these products are given to me in relation to their raw material usage. So see, 10 divided by 1, 10 rupee per kg contribution means every kg of the raw material this product is using, this is giving me 10 rupees in return. B is giving me 5 rupees in return for every kg of raw material usage, and C is giving me 6 rupees return for every kg of raw material usage. So this is the most profitable for me, second most profitable for me, and this is third most profitable. So if I have to what you can say, stop any product, then I will stop B, because A and C are important because they are giving me contribution per usage of raw material more. So this is the correct option, that whenever you want to maximize profit, you see contribution per unit of scarce resource which is used to make the product. Question number 33. In which of the following scenarios zero-based budgeting would be suitable? Zero-based budgeting means everything is started from scratch. What happens in conventional budgeting, that okay, last year sales figure was 40 lakhs, so this year our sales figure should be 50 lakhs. You will add some percentage on the last previous year figure and you will make current year budget. But this is not the case with zero-based budgeting. What happens in zero-based budgeting is you determine each and every figure of the budget from scratch, from starting. You do all the discussion, what are the market scenarios and everything, then you decide budget. So which scenario? Building, mining, transport, government departments. So in all these scenarios, in government this is most suitable because conditions change, right? Inefficiencies are most in government department, right? So I should not be saying this, but it is actually the fact that inefficiencies are most and hence they need it more. Although zero-based budgeting is suitable for every type of industry over here, but most suitable to government because inefficiencies are more over here. They tend to inflate the budget prices, hence it is important. Which of the following operating measures would a manager would like to see decreasing over time? What he would like to see decreasing over time? Okay, merchandise inventory turnover, total quality cost, percentage of on-time deliveries, and the next thing, which finished goods inventory turnover. Wait. So the last option is finished goods inventory turnover. Now, what I would like to see decreasing over time? Merchandise inventory turnover, total quality cost. This is the thing which I would like to see decreasing. Why? Wait for a second, this has become clumsy. Because I want to have on-time deliveries, I want to increase it. Inventory and FG, the more these are getting used, the better it is for my company, correct? The better I will be having sales. Turnover means how fast your inventory is getting sold out. Merchandise inventory turnover means how fast your inventory is getting consumed. So if it is increasing, then very good for me. But quality cost means what? So if you are producing quality products, then you will have to spend less on quality inspection and checking and all those things, right? Because your standards are so much that your product never gets failed in quality testing. So over time your quality cost will get reduced because you have standardized the process that much. So this is the thing which I would like to see decreasing. Again, a theoretical conceptual question and very easy to attempt. So this is it for today. Like we have completed costing questions, and I hope these questions are worth engaging and worth learning for all of you. And if you guys have loved this, then please do not forget to give us a thumbs up and do not forget to give me the answer for the question which I have asked. Okay, do comment down below, and thank you so much for watching.